Good morning. This is Greg Hernandez with Nasdaq's Market Intelligence Desk with today's look at the markets for Wednesday, August 11th. Futures are pointing sharply lower this morning amid economists' comments after yesterday's Fed meeting, in which the Fed stressed the weakness in the U.S. economy. Now, a survey by Bloomberg News of leading economists shows that economists have lowered their expectations for U.S. GDP growth in the second half of 2010 down to 2.55%. Now that contrasts with 2.8% just a month ago. So again, economists surveyed by Bloomberg News lowering their forecasts for U.S. economic growth in the second half of 2010. Now also this week we did see that Goldman Sachs economists lowered their forecast for 2011 in the U.S. from 2.5% growth to just 1.9% growth. So again, all of these forecasts ratcheting down for U.S. economic growth. In the Bloomberg survey, commentators also have their forecasts now for unemployment to average 9.6% in 2010 in the U.S. and 9.1% in 2011. So again, very, very slow recovery forecast in job growth. Today we saw figures on the U.S. trade balance. Now in June we saw a deficit of $49.8 billion. $49.8 billion. That is the widest trade deficit since October 2008. In earnings last night, Disney reported, and they beat earnings by 16%. Again, we've been talking about an advertising recovery throughout the first half of 2010. All segments looked pretty good, especially ESPN, the sports cable channel. This week we're going to see initial jobless claims on Thursday morning. Also pricing data here in the U.S., CPI figures on Friday, and the very closely watched University of Michigan consumer sentiment on Friday this week. That's been all. This is Greg Hernandez from Nasdaq's Market Intelligence Desk.